Hello and welcome. My name is Alex Romero from the GASB Learning Solutions. On this week's Genuine Learning blog, we're going to be looking at the GASB's preliminary reviews on infrastructure assets. So the preliminary reviews on infrastructure assets was released on October 10th, 2024, with comments being due January 17th, 2025. So a little background on this, users are seeking to have improved information on infrastructure asset conditions and also the maintenance efforts that are being put forward by the governments. So we don't always see preliminary reviews issued by the GASB Board. As such, it's really important to understand what a preliminary reviews is and what a preliminary reviews is not. So a preliminary reviews is a board document designed to set forth and seek comments on the board's current views at a relatively early stage of a project. So the preliminary reviews is a step towards an exposure draft, but is not an exposure draft. So preliminary reviews is just that. It's the preliminary views of the board about the accounting and financial reporting for infrastructure assets, including those principles, purposes, and objectives in looking at the infrastructure assets. So preliminary reviews is generally issued when the board anticipates that the respondents are likely to have sharply divided ideas on these issues, and also when the board itself is sharply divided on the issues. So the preliminary reviews represents the board's current view on the infrastructure asset issues that are discussed in this document. So first, it's important to understand what is an infrastructure asset. So in our GASB statement number 34, an infrastructure asset is defined as being something that's a long-lived capital asset, that it's going to be normally stationary, immature, and normally can be preserved over a significantly greater number of years than most capital assets. So GASB 34 also includes some examples of what that would be. It includes things such as roads and bridges and tunnels, also drainage systems, water and sewer systems, looking at our dams and lighting systems. They also include buildings if they are used to provide a particular service for the public. In the preliminary reviews, it's also discussed to add communication networks as part of the infrastructure assets. So we too have two different measurements methods under infrastructure assets that would remain in the preliminary reviews. So we have our historical cost net of accumulated depreciation, and then we have that modified approach that is going to be the historical cost without having depreciation. And the one thing that is different in the preliminary reviews is that they're saying that they would eliminate the requirement to have an asset management system if this modified approach is used. So our preliminary reviews disclosures does list some of these disclosures that they would be looking to remove. So the first one would be saying that when we're using that modified approach, we would no longer have to describe the approach in the summary of significant accounting policy notes. The second one here is that we would be not required to report that the government did not have to retroactively report infrastructure assets when implementing GASB 34. So what that really means is that right now you would have to describe if when you implemented GASB 34 that you did not have to retroactively go back and report and disclose on the infrastructure assets. So what this is saying is that we're just going to remove that because that has been usually pretty distant in the past. And the last one on here is that we would no longer disclose the impairment amount for infrastructure assets that are going to be idle at our year end. They also are looking at adding some things to the disclosures in this preliminary reviews. So the first one is disclosing the changes to the policy for capitalizing infrastructure assets or estimating the useful life when calculating depreciation. So if you have any changes there in your policy, you would need to describe that. The second one here is that when you're using historical net of accumulated depreciation, you would be disclosing that historical cost by major class that exceeds 80% of their estimated value. So you would be breaking these down. You would be separating the historical cost of the infrastructure assets that has exceeded their estimated useful lives for those infrastructure assets that have exceeded 80% of their estimated lives, but have not yet exceeded their full estimated life. You also would be disclosing that maintenance or preservation expenses that's going to be related to the infrastructure asset, and you would be doing that by major class as well. Finally, you would be disclosing the policy for monitoring and maintaining or preserving your infrastructure assets. When we look at our required supplementary information, again, we're going to be looking at this under those two different methods. So our historical cost net of accumulated depreciation, we would need to have that schedule of maintenance expense that's going to be related to our infrastructure assets. And it's also going to be broken down by major class and show the history over the past 10 fiscal years. The next method, that modified approach, we would need to have our assessed condition of assets from the 3 most recent complete condition assessments. Also, we'd have to have an estimated annual amount by major class to preserve that asset either at or above the condition level that was established and disclosed. So under each of these approaches, you just need to look at what is the required supplementary information if you're going to be using that historical cost, net of accumulated depreciation, or that modified approach. So when we're doing when we're looking at maybe new GASB pronouncements and when the board is going to be doing these preliminary reviews, we have to think about, well, what's the benefit of this? What is it going to improve with financial reporting? So it's going to improve and enhance the consistency and the comparability of these infrastructure assets. So it's really going to be elevating the requirements to review those estimated lives and salvage values. It also is going to be depreciating separately those components that have significant relation to the total cost of that infrastructure asset. So really breaking that down. So if you had a road and you had the road base was something that was going to have a useful life of 50 years, and then the top was only going to have maybe a useful life of 5 to 10 years, you would be depreciating those separately because the road base is going to be there for much longer than that top layer. So as I said, comments are going to be due for this on January 17, 2025, followed by having public hearings and user forums. And so you can find all this information at the GASB's website, and we will also include a link in our comments and provide that information so that you can read the whole preliminary reviews for infrastructure assets. So thank you so much for joining me today as we did look at GASB's preliminary reviews for infrastructure assets.